The following pre-recorded program is sponsored by Adams Financial Concepts. Welcome to About Money, a different approach to investing you won't hear anywhere else. Your hosts, the AFC team, Mike and Al, are registered investment advisors who have a proven track record of managing long-term investments surpassing the markets. The information shared on the following program is for educational purposes only, and any investment advice given may not be suitable for all investors. And now, here's your AFC team, Mike and Al.
And it's Saturday, and you get just me today. I've been doing this radio program since October of 2008, and I'm back again. Al will be back next week or the week after. He's got some things going on right now. So I've got a story for you today, and I want you to listen to the end because it has important implications for your investments. It may not seem so when we begin this story, but it really does. And things that have never happened before happen all the time. And the story relates to this. It relates to your investments. But before I get to that story, I want to remind you of some predictions coming out of the Great Recession, March 21st, 2001. At that time, Andrew Roberts of the Royal Bank of Scotland was saying the cliff edge is just around the corner for the banking system. Think the unthinkable. The market is just going to drop off a cliff. That was 2010. Mark Faber was even earlier in 2009. He predicted hyperinflation of over 100%. Inflation of over 100% per year with the Fed injecting money. And actually in 2013, he was predicting a 1987 type crash. Almost with no warning, the market is just going to drop 1/3. Michael Lombardi, Profit Confidential, said we're going to have the greatest crash we've ever seen in 2013. Jerry Robinson wrote a book called Bankruptcy, which he predicted that this country would be bankrupt before 2020. Daniel Park said the same thing as Jerry Robinson. But on March 21st of 2010, I said the Dow, which stood at 10,193, was going to go much higher, maybe as high as 100,000 by 2030. That may be a little optimistic, but already we're over 40. We're halfway there, and we certainly didn't drop off a cliff. We certainly haven't experienced hyperinflation. So I was pretty correct, and because of that, our clients have done well over that period of time. February 3rd, 2012, I talked about, and the Dow was just 12,862. I talked about the supercycle where worldwide GDP was growing faster than average. So first supercycle from 1870 to 1913, 43 years. Second supercycle, 1945 to 1970. Third supercycle was beginning in 2009 and would take us maybe through 2030. We'll see how that plays out in the next few years. But certainly from 2009, it certainly has been playing out. On March 17th, 2016, with the Dow at 20,914, I said, it was time to prepare for inflation. 2016. 8 years ago, I said, time to prepare for inflation. I can't think of anyone else who was saying anything close to that, but I wanted my clients to prepare. Why do I say all that? Because my track record has been pretty good. And so when I talk to you about this story, I'm relying on my track record. I believe that I'm pretty good at this. I'm not 100% right, but pretty good at seeing some of the big things that are happening. So I'm going to tell you my story now. My story is about Harry Truman. Not Harry Truman, the president, but Harry Randall Truman. He achieved some fame. He owned a fishing lodge, a sporting goods store. He was in his 70s, and fishing and sporting goods, that was his life. His wife Edna had passed away a few years before, and he was a widower, but Harry was also not completely law-abiding. He got a park ranger drunk one time, so the park ranger was so drunk he passed out. So Harry could burn a pile of brush because a burn ban was on. But getting the park ranger drunk, he was able to burn the pile of brush. Harry was the person who stole gravel from the U.S. Forest Service. He made himself a fake game warden so that he could fish on Indian land. Now, Harry was a pretty remarkable guy. He drove a pink 1957 Cadillac and already a noted character where he lived. But when the government came along and said he needed to close down and move, Harry refused. The neighboring businesses all complied. They grumbled, they moaned, they complained, but not Harry. Harry stood still. Newspaper reporters came to interview him. He became a minor celebrity. A group of children sent Harry a banner saying, Harry, we love you. So he stood still. Actually, he rented a helicopter and went to thank those children. So famous did he become that he made the front page of the New York Times. He made the front page of the San Francisco Examiner, the front of Time and Newsweek, Field and Stream. He refused to close and move. Harry lived on the south end of Spirit Lake. If you live in Washington, you know that Spirit Lake is on the north side of Mount St. Helens. And the fishing lodge that he owned and operated was on the north side of Mount St. Helens. Geologists had come to him and said that he was in the path where the molten lava would flow. But he lived there. He was in his 70s. He loved that mountain. That was his life. That was his livelihood. He rationalized even if Mount St. Helens blew, lava was going to go down the other side. It was logical it would go down the other side. And he had other people that told him it would go down the other side. Harry Truman did not believe. He did not want to abandon his surroundings and his life. And he was being told on the New York Times, on the San Francisco Examiner, Time and Newsweek, Field and Stream, and becoming notorious because he was staying put. All of his neighbors moved. But on May 18th, Mount St. Helens did erupt. The north face collapsed right over Harry and his lodge. And as Paul Harvey might say, now you know the rest of the story. You know, we're creatures of habit. We don't want to change. And we listen to people who reinforce what we believed. Harry listened to people who believed that Mount St. Helens was not going to blow. He believed people who told him that even if it did blow, it was going to go down the other side. He wanted to feel comfortable. And that's where a lot of people are on their financial situation. They have a financial plan. They have advisors telling them all is going to be well. Here's how you get to your retirement. Here's how you pay for your children's education. Here's how you get to the end of your life without running out of money. Financial plans are not drawn up for the unexpected. They're not drawn up for black swans or black elephants. And stay with me for the impact on investments, because that brings me of a second story, a potential black swan. And understand it's happened before. It's not expected, but it is another story you have to listen to. The year's 1815. If you remember your history right, that was Waterloo. Napoleon met his end at Waterloo. It was the final decision for the Congress of Vienna to redraw the borders and rebalance countries, even the redistribution of power. It was the birth of Otto von Bismarck. Huge events, 1850. But the biggest event of all was from a mountain, Mount Tambora. Mount Tambora is a volcano on the Indonesian island of Sumbawa. It blew, and not only did it blow, it blew in a spectacular fashion. Molten rock, lava, was blown 25 miles into the air. 25 miles. Think about it. If you're on a jet plane today, you're flying at about 8 miles in the air. That mountain blew molten lava 25 miles into the air. Plane flying over Mount Tambora would have been consumed, just like Harry was consumed. It was the most powerful eruption in over 500 years. Ash spread for hundreds of thousands of miles. Think of Mount St. Helens. Ash covered not even the USA. Covered Washington into Idaho, Oregon, but it didn't cover the USA. Mount Tambora spilled out billions of tons of dust and gas and rocks and ash. Tambora set off multiple tsunamis. Remember the tsunami from Thailand, the tsunami from Fukushima? It set off multiple tsunamis. 60,000 to 120,000 people died in Indonesia alone. Sulfur hit the atmosphere. In New England, clothes froze on clotheslines. There were no washing machines in 1815. People washed their clothes and hung them on the clothesline. Clothes froze on the lines. Maine and New Hampshire. Glaciers surged down the Alps. Grain was in short supply in Britain that the corn laws were suspended. The corn crop failed. Thousands of people starved in China because of that cloud of dust that covered China and even covered most of the world. Typhus spread in Europe. Most of the ash eventually fell, but it stayed in the atmosphere, and temperatures in the atmosphere were 4 degrees higher. It lowered rainfall by 4%. 1816, the year following, was cold and wet, and crops worldwide suffer. People called it a year without summer. That was Mount Tambora. That plays into all of this as well. This is part of the story of Harry. This is part of the Black Swans. But Mount Tambora was nothing like Mount Toba. Tambora was 40 times larger than Mount St. Helens. Toba was 40 times larger than Mount Tambora. Think about it. Mount Toba. Don't go away. I want to tell you about Mount Toba, and we are going to get to investments. So don't go away. Listen to me, because this is very, very important. This is going to impact you.
About Money with your AFC team, Mike and Al, on AM 1300, The Answer. For more information, click on adamsfinancialconcepts.com.
I started by talking about Harry Randall Truman, and he lived on the south side of Mount St. Helens, and Mount St. Helens, when it blew, rolled right over Harry Truman. And I went to Mount Tambora, which was 40 times larger than Mount St. Helens. But Mount Toba was 40 times larger than Tambora. It became a population bottleneck. It almost wiped out the human population. It sent molten lava and ash 671 cubic miles. It would have covered the lava and the ash would have covered the entire United States 1 foot deep. World temperatures dropped between 5 and 10 degrees Fahrenheit, and the damage lasted for years, maybe even several decades. Imagine Mount Tambora, what we know, and Toba was 40 times larger. It wiped out agriculture. Imagine the dozens of tsunamis. We didn't have San Francisco or Seattle or New York City, Boston or LA, San Diego, or some of the cities, London. We didn't have Shanghai and some of the cities around the world. Imagine the tsunamis, dozens and dozens of tsunamis that were created, the damage to agriculture, manufacturing, power, and the economy, and what it would take to rebuild. And if you think it couldn't happen in America, think about Yellowstone. Yellowstone was as big as Toba. Yellowstone's been recently in the news for having 70 earthquakes. That should worry geologists and maybe you and I. All those are just potential examples of random, unexpected black swans. Now, and they will. I will relate them to investments as we go along. Please stay with me. I told this story about Harry and Mount St. Helens, about Mount Tambora, about Mount Toba in 2019. And I used the volcano as a black swan event. The idea was there are going to be things that happen all the time that have never happened before. The volcano was one possibility. There could be earthquakes or meteors or a terrorist nuclear bomb in a major city, a chemical gas, and the list could go on and on and on. And those are black swans. While I talked about the volcano, I talked about being prepared for black swans, being prepared with your investments for black swans. And while I talked about the volcano, I didn't even think about a little piece of DNA that had just 23 pairs of amino acids. 23 pairs. Humans have 3 billion pairs in our DNA. That little piece of DNA had just 23 pairs. But what that little piece of DNA did, what that little piece of DNA was a black swan. And what that little piece of DNA did is that it killed over 7 million people worldwide. And over 1 million Americans died from that little tiny piece of DNA. And of course, that DNA was the COVID virus. And when I talked about the volcano, I was talking about black swans. I didn't know what they would be. I mentioned a number of things, which I just mentioned: earthquakes or meteors, a terrorist attack, terrorist nuclear bomb in a major city, a chemical gas release in a major city. And it just goes on and on. And it was maybe like the dot-coms. Black swans are things that happen that are completely unexpected, but black swans happen that have never happened before, happen all the time. Things that have never happened before happen all the time. And what all this does, let me now tie it into where we are and talk about the investment side, because there's several things you can do for a financial response right now. You can do nothing. You can do nothing. Just sit and wait. Just trust that your financial plan is good. Just trust that black swans will never arrive. Just sit there and wait and think nothing of it until it happens. Or you can actually sign up for our seminar, July 25th, Tulio's Restaurant, downtown Seattle. It's easy to get to. Valet parking, a full dinner, limited number of places, just 24, and we're asking $25 to hold a reservation because there's no free lunch or dinner. You can pick up the phone and call right now. I feel like I'm on those ads on TV for the knives or for the cooking sets, And wait, if you order right now, no, I'm just joking. Don't put it off. Don't think that you can be like Harry Truman and just wait it out for the lava to flow over. You should right now, and I sound like those commercials on TV, but right now, you should pick up the phone and call 206-903-1019. Let me repeat that. Write it down. 206-903-1019. Or just log on to Adams Financial Concepts, the website. Fill out the contact form and say you want to go to the seminar. The worst is you get a really, really nice meal for $25, and that's a really cheap meal. The best is you may be hearing things you have never heard before. You may be thinking and knowing about things you never heard before. And we have a solution that's pretty straightforward and pretty simple, not to be hammered down. If you don't go, think about this. Some of these things could impact your investments for 1 or 2 decades. Take your current income and divide it by 2. Take your current net worth and divide it by 3. Can you live on that for the next couple decades? I sound like the ads on TV. Call right now. Call right now. Anyway, those are things which you should be prepared for. I am almost 100% sure that you're not hearing these things from your current advisor. I'm almost sure that if you're hearing them, you're not being prepared in the right way. You should be prepared. And the worst thing is you just end up in a much better place, feeling more confident because if there's one of these black swans, it won't be a pandemic this time. Could be meteors, could be a terrorist attack, could be chemical gas, could be an outbreak of war, could be sabotage of the entire electrical system. The list goes on and on and on and on and on of things that have never happened before that happen all the time. And those are things to be prepared for. Those are black swan events. Those are the black swans. They're the unexpected things, but they're not the only thing. I have to say that not only do we live with black swans, but we live with black elephants. Black elephants are things that we see, we know are happening, and yet we don't take any caution to prepare for them. Or if we do, it's already after we're well into the situation. Think about the dot-com bust. I actually, for clients, was early in the dot-coms, but as we got to 98 and 99, I was completely out of dot-coms for my clients. It was a time in which you had a lot of people saying, there's so much froth in the market. The market is so crazy to keep going up based on these dot-coms. And people could see, I could see the potential of the internet. I used to look at it in those days. This is the mid-90s, late 90s. I could see the advantage. I was asked to be a speaker one time at Rotary, University Rotary Club. This is 1993. And I asked the question, 1993, how many people have an email address? And out of 180 people or so, there were 6 that raised their hand. And I said, remember when people used to say, do you have a fax? What's your fax number? They don't say, do you have a fax anymore? They say, what's your fax number? So the time will come when people won't say, do you have an email address? They'll say, what is your email address? And no, I never figured that I would have 3 or 4 email addresses, and a lot of people have multiple email addresses. But you could see the potential. You could see the potential when you looked at what was going on with Microsoft back in those days, because computer memories were doubling every 18 months. Computer memories were doubling every 18 months, which meant that Microsoft could continue to write script and increase the size of their programs, the Excel, the Word, and their databases. They could continue to fill up those memories. How well I know. In 1986, 1987, I bought a computer. I bought 2 computers, one for home, one for business, 60 megabytes of memory at home, 100 megabytes for the one at work. And when the computer began to slow down, I called the IT person and I said, there's something wrong with my computer. He came in and he said, no, you're running out of memory. I said, it's impossible. I have 100 megabytes of memory. He said, you're running out of memory. Yes, indeed. Microsoft was able to fill up that memory. And in 1993, the internet was just beginning to grow by the mid-90s, I was saying the internet is doubling every 6 months. Compare that to computer memories, 18 months. Think of the power of that was then. But by the 1998 and 99, people were beginning to understand the power of the internet, and things were going wild at that time. People could see that there was a bust coming. And yet, even seeing that, how many people got caught when the market dropped 60, 70%? How many people really saw that happening? They could see it in 98 and 99. They knew that the market was going to hit a bust and come down. But did they actually prepare for it? No. I have to say, in 2000, my clients were up 38%. In 2001, up 20%. Anyway, don't go away. We'll be back after this to talk about black elephants. You should hear what we have to say.
About Money continues. Remember the website, adamsfinancialconcepts.com. Here's your AFC team, Mike and Al.
And let me repeat, this program is about one thing, conveying to you the importance of a seminar. It is being held by Adams Financial Concepts. It's going to be at Tulio's on July 25th, downtown Seattle. It's easy to get to. There will be valet parking. It will be a full dinner. There will be a limited number of spaces of just 24 because that's what we can get into the restaurant. $25 to hold a reservation. There's no free lunch or dinner. But you can reserve your spot now by calling Carl at 206-903-1019. Let me repeat that number, 206-903-1019. Don't get caught by surprise. You're going to hear things that you probably will not hear from anyone else. You're also going to be told there is a solution. So come and hear what's said. It's important. I've been talking about black swans, but I want to turn and talk about the black elephants. I started to talk about the dot-coms. People could see the bust was coming, and yet they did nothing. In 2016, I started talking about inflation and preparing for inflation. Think back to the 1960s and 1970s. Most people think of the hyperinflation was in the 1970s and due to oil. But it really began a decade earlier. It began in the early 1960s. It began with the Great Society, and the Civil Rights Movement, and the war in Vietnam. And while all those things, well, maybe not the war in Vietnam, but while the Great Society and the Civil Rights Movement, and some of the programs that happened during that time, Medicare, while they were positive programs, the spending was huge. And the spending, not dissimilar from what we've seen with the Build Back Better or the IRA bill, what we've seen on the infrastructure bill, what we're talking about with the green spending. We're seeing a lot of spending take place similar to what was happening in the mid-1960s. And inflation began to tick up. William McChesney Martin was chairman of the Fed at that time, and he reacted just like Jerome Powell's acting now. He began to raise the interest rates. And through that process, unlike today, the yield curve did invert back then, and we did start into a recession. By 1972, when Nixon was coming for re-election and it was time to appoint another chairman of the Fed, Nixon chose Arthur Burns. And by this time, we were in the beginning of a recession. Inflation was coming down. Interest rates were high. They needed to start coming down. And actually, Martin had started to lower the interest rates. Arthur Burns continued to lower the interest rates. But instead of coming down, you had a geopolitical event that happened when OPEC decided to withhold oil. And oil prices shot up, and along with it, up went inflation. And now you had a combination of things going on in the U.S. You had inflation and a recession. We called that stagflation. That was then. The impact was portfolios lost 30% of their value, of their purchasing power. Incomes were cut by 70%. I said portfolios lost 30%. No, they were cut by 70% down to 30%. Income went down by that amount. If you look at what's going on today, there's very similar kinds of things going on. What you could buy in 1960 for $1 cost $3 in 1980. I remember one of our clients that came in 1986 was a widow whose husband died in 1978. She was 58 years old. When her husband died, she had enough insurance to replace his earnings. She had a nice enough nest egg with his pension, with her pension. She was doing fine. Just 8 years later, most of those bonds, which had been paying very high interest rates, had been called away. And not only that, what she could buy for $1 in 1978 needed $2 now. It was a time in which inflation had cut her income and her net worth by over 50%. Bond yields were down, the actual dollar was down, the purchasing power of the whole nest egg was down. That's the scenario where she was looking at running out of money had she continued. And she was just 58 years old in 1986. Think about it, 58. She would go on to live another 32 years. Had she been at a regular financial advisor, I'm convinced that she would have run out of money a long time before and been dependent upon Social Security. But even if you look at where we are since 2000 with Social Security to the current time, Social Security with the COLAs has not kept pace. Have you seen the grocery bill now? How does the grocery bill now compare to 2019? The dollar will never recover, and it's a slow, creeping erosion. It's just the opposite of the pandemic. The pandemic, the market went down, and in 164 days it reached new highs. It's very different from the Great Recession, where it took 3 years to recover. And this little bout of inflation is maybe just very similar to what we saw in the 1960s, where you had excessive spending and inflation kicking up because you had too many dollars chasing too few products. That's not the kind of inflation which could be on the horizon. On the horizon, there's a difference between two types of inflation. We've talked about this before. We'll continue to talk about it until it either becomes a real issue or it goes away. Right now, we're talking about a cost push inflation. That's what happened in the 1970s. It was oil that pushed cost and prices up. Oil used almost everywhere. If you look at cost push inflation, it's basically, rule of thumb, 2/3 due to wages and 1/3 due to commodities. In the 1970s, it was commodities that pushed the prices up. In 2020s, it seems to be wages that are pushing up. Wages running at over 4% a year. Wages in a normal time are offset by productivity. Productivity gains offset wages so that you end up with wages going up, but everything becoming more efficient. We're not seeing that now. We're seeing productivity gains of 1 to 1.5% and wages up 4%. There is right now a thing going on so that it doesn't show significantly, but it's like the frog and the hot water. Drop a frog into boiling water and it immediately jumps out. Put a frog in cold water and slowly heat the water to boiling and the frog boils. Now, nobody knows if that's really true, but it's a great illustration. That's the creeping inflation, which until you're really in the middle of inflation, you don't really realize where you are. And by the time you're in the middle of inflation, it's a very difficult time to get out of. That's one of the black elephants that's on the schedule, or that we see happening. We see even more with government spending. We see with taxes coming up. We see a number of black elephants on the horizon, and we want to talk about those. We're going to be talking about those in our seminar, and once again, this program is all about telling you about the seminar, July 25th, 7 to 9 p.m. at Tulio's restaurant. There's valet parking, a full dinner, $25 to reserve your place. We're going to be talking about 6 major black swans or black elephants you need to be aware of, and we're going to talk about the solution to those as well. We're talking about how to address those. So it's worth taking the 2 hours of time plus the travel, plus the $25. That's the reservation fee. Call 206-903-1019. You will be happy you did. These are the things that we see coming. These are the things that your advisor's not telling you about. These are the things that economists are not telling you about. These are the things which you need to hear. My track record is pretty good. I talked about the time coming out of the Great Recession when a number of people were predicting we're headed for another crisis. Didn't happen. Talked about people who were predicting 100% hyperinflation. Didn't happen. People who talked about the worst crash in our history. Didn't happen. All of that. But do do sign up for the seminar. And I hate to sound like the people selling kitchen knives, but it's really important to be there. The number is 206-903-1019. It is Saturday, so leave a message on the phone. Carl will get back to you on Monday or Tuesday, but do call. Call today, 206-903-1019. This is maybe the most important thing I've been saying. And if you've been listening to the program since 2008, you know that I've had a very optimistic and very forward-thinking type of believing and a very glass half full attitude. Seeing the market climb, seeing things happen, seeing performances do well. For the time being, this is really a concern, a very big concern, bigger than the concern that I had in 2018 when I talked about a potential black swan, bigger than 2016 when I talked about the kick-up of inflation. I think there's a multitude of factors which are going on. So July 25th is the seminar, Tulio's. Don't go away. We've got a little bit to wrap up. Stay with me.
About Money with the AFC team, Mike and Al on AM 1300, The Answer. For more information, click on adamsfinancialconcepts.com.
And once more, I'm going to tell you about the seminar. I've been telling you about the seminar all time, the whole program. It is July 25th from 7 to 9 p.m. It is dinner at Tulio's. There is valet parking. We're going to be talking about 6 major issues facing the United States and the world. 6 issues which will truly impact your investments. And I have to say, past performance is no guarantee of future performance, but we feel that there are 6 issues that could have a dramatic impact on your portfolio. It could cut your income by 50 or 70%. It could cut your nest egg by 50 to 70% or more. These things have the potential to truly damage. And there's ways to respond. I forgot to add, for the seminar, call Carl. Call him today. Leave a message on the phone, 206-903-1019. Call today. Don't hesitate. And I believe that there's 4 responses to thinking about the black swans, the black elephants, the things that are on the table for coming. You can do nothing and wait it out. By doing nothing, people for the Great Recession ended up seeing asset allocation not work. Different asset classes were supposed to be uncorrelated. When one went down, another was supposed to go up. That was the theory. In fact, during the Great Recession, everything went down. It showed that all asset classes dived. Bonds, stock, commodities, real estate, they all went down. Only cash stood the test. And cash, right now, with inflation going where it is, that's automatically going on. So doing nothing puts you at a significant risk. Don't think also that you can just wait it out. At the pandemic, it took only 140 days to recover. The Great Recession, within 3 to 5 years. The inflation period of time, just a couple years so far, and we're not out of the inflation time. Toba, Tambora, they took decades to don't count on a 5-year recovery. You know that for $100,000 in a portfolio, the purchasing power of that in 1961 took 32 years to catch up with what the Consumer Price Index did from 1961 to 1993. 32 years. That could be a situation we face. The second thing is something that I'm sure that we'll be seeing as we get into some of these events, and that is, I heard from a conference where they were doing options in portfolios. They could guarantee that if a stock went down, the options would cover it. And it only cost 6% per year. Think about that. 6% a year to cover the option. And how does that compare? Every 100,000? By the 3rd or 4th option, you were break even at the very best. And if you were break even at the very best, that meant you could lose a half to 60% of the purchasing power. We have, in my opinion, a 3rd and a 4th option, which we're going to talk about at the seminar. Straightforward. This is what you can do. This is where you need to be. You need to be aware of what's going on, and you need to take action today, not next month, not the month after. And when I say that, it sounds like it's something that has to be done immediately, and I shouldn't do that because we're not in a critical situation. We're not going to see on a volcano erupt tomorrow, but then we could. Who knows? But I'm telling you, it's better to be prepared. That's the Boy Scout motto, be prepared. And that's what we're trying to do for you. It's a seminar. Let me repeat. I keep repeating. Is that important? It is July 25th from 7 to 9 p.m. Call Carl, 206-903-1019. And I assume by now you've been able to write that down. Leave him a message and say that you want to come to the seminar to save you the place. And bring some friends. They should hear this as well. We stand at a time in which there's a very difficult situation coming. If you're not prepared, you know what it's going to be like. Think about some of the stories, and maybe we've forgotten a lot of the stories that came out of the Great Recession of parents whose children couldn't go to the college they planned to go to because the stocks had lost enough money. They didn't have enough to fund a full education, or the people that were approaching retirement that had to work a few more years to make up for the losses in their retirement accounts. Or the people who were retired, who had to sit at the kitchen table. That picture of the man and wife sitting at the kitchen table with a stack of bills trying to figure out which bill to pay, which not to pay, what to cut, what to change, what cost to cut out of their life. You know, those are the pictures that happened in 2008. And that was a pretty short period of time. We recovered in 3 to 5 years. That was a very short period of time. We're facing something that could be 8 or 10 years, or maybe a couple decades. You should be aware of it. You should be aware of what's coming. You can make a choice whether you want to deal with it or not deal with it, but at least know what's coming and how it's going to happen and what it is. You know, during the Great Recession, all the economists said we were entering we had been in what they called the golden period. They never expected a depression. They never expected that we would see that happen. That was a black swan. It slammed the market. During the pandemic, who would have thought that little piece of DNA in 2019, there would be a little piece of DNA that would kill 7 million people worldwide and over a million Americans in 18 months? Who in 2019 thought that was possible? Who prepared for that? Were you prepared for that? We were lucky because the recovery was 164 days. You know, I did programs in 2019 talking about the potential black swans. I didn't see the pandemic coming, but I did see a black swan. Inflation. Are we done? We don't think so. We think it could be much worse. 6 major issues on the horizon, black swans, black elephants. We need to talk about that. One more time on the seminar. I've repeated. Do you think that there's a theme to this whole thing? So the seminar, July 25th, 7 to 9 p.m. at Tulio's for dinner. Valet parking, call Carl, 206-903-1019. Reserve a spot. There's no free lunch or dinner. It's $25 to reserve your spot. And it's limited to 24 people at this time. If we have overflow, we'll do other seminars. But right now, reserve your spot. Once again, 206-903-1019. Call Carl or log on to Adams Financial Concepts website. Fill out the contact form and ask to go to the seminar. And until next week, we will be talking about money on Saturday. Have a very good weekend and a great week. Come see us at the seminar. That is a repeated seminar, but is so important. It is so very important. I can't begin to tell you how much I think this needs to happen.
You've been listening to About Money with registered investment advisors Mike Adams and Al Souza. If you'd like more information about what you've heard today, or about AFC's investment philosophy and strategy, or if you'd like the AFC team to evaluate your own portfolio, click on adamsfinancialconcepts.com. That's adamsfinancialconcepts.com. The information shared in the preceding program was for educational purposes only, and any investment advice given may not be suitable for all investors. Join us again next Saturday at noon for more About Money with Mike Adams here on AM 1300, The Answer. The preceding program was sponsored by Adams Financial Concepts.